Good afternoon, everyone. Myself, Tejas Vaiti, on behalf of Kirin Advisors. It's a pleasure to welcome you all to Beyond the Numbers Value Discovery Summit 2025, powered by Value Educator and co-powered by Kirin Advisors. Today marks the final day of our three-day summit, featuring a powerful lineup of focused management meetings to conclude the journey on a high note. Uh, the next interaction of the day is with Maiden Forgings Limited. From the management team, we have with us Mr. Nishant Garg, Managing Director of the company. Good afternoon. Welcome, sir.
Good afternoon.
We also have Ms. Angela George from Team Value Educator. Good afternoon. Welcome.
Good afternoon.
With that, now I hand over the floor to Ms. Angela. Over to you.
A quick introduction before we begin. Maiden Forging, incorporated in 2005, is a specialized manufacturer of bright steel bars, wires, and other value-added ferrous products. The company produces a wide range of sizes, from ultra-fine 0.19 mm wires to heavy 100 mm sections across multiple steel grades and profiles. Its portfolio includes bright bars, wires, ground bars, customized profiles, and nails, supplying to industries that require high precision and consistent quality metal inputs. With this, I complete my company overview, and I would like to hand it over to Mr. Nishant Garg, the Managing Director. Over to you, sir.
Good afternoon, everyone. Thank you, Angela. Maiden Forgings Private Limited was started as a proprietary name Maiden Industries back in 1988-89. We started with the production of carbon steel bright bars, which was a core product back then, only product back then. The journey went on. In 1997, we also introduced with carbon steel wires under the proprietary only. In 2005, Maiden Forgings Private Limited was formed, and by 2011, a major milestone was achieved. And at that point of time, the entire management team was changed in terms like my father started back in 1988-89. He was there, but there were external people, so it became a family owned kind of a company back in 2011. That's when the real growth happened. At that point of time, it was the top line was around 13 crores with two products in hand, that is this carbon steel bright bars and wires. uh, that was the point where I joined the business, and we decided to make the growth at a higher scale and increase the scale of the company as well as the growth plans of the company. So by 2013 14, we added alloy steel bright bars and wires to our product line, uh, by doing some research and development, and that's what gave us an edge in terms of we were now able to cater to the better automakers, because the alloy steel requirement is highest in the automobile industry. So the journey further continued. In 2016 came the next major milestone, wherein we established our unit 2, which was almost four times in size of the unit first, which we were running. And in that we had a full-fledged setup of uh, laboratory, as well as there were latest machineries and equipments were installed in that plant for the production of stainless steel bright bars as well. So this way, by now we reached five product lines, and then in 2018-19 third unit was installed, wherein the new equipments and machineries included that which can produce stainless steel wires as well. This plant area was slightly higher, bigger than the second unit itself. So by 2019, we had six product lines in our hand, and recently we closed our numbers at 214 crores. So that has been the growth journey from 2011-12 till now majorly, and uh, rather going further back from 1988 till date. So in between, 2 years back, we also added back, we got listed, and we also added a product line of pneumatic gun nails over here, which was our forward integration. And this we are currently producing in stainless steel and carbon steel. So total of eight product lines today we have. So this was about a brief history of the company, how it grew from a small proprietary till listed company on BSE SME. Uh, now, and the product lines already shared with you. And next comes like what all industries we are catering to. We are catering to the engineering segment OEMs, and then the auto sector OEMs, of course, all three-wheeler, four-wheeler, two-wheelers, and heavy vehicles. Uh, then next, we are catering to the home appliances and hardware industry. A few of the reputed names that we can boast of in our list is Fastenal USA, then Hettich, then we have got TTK Prestige, uh, multiple vendors to the auto sector giants such as Honda, Hero, then Maruti, Volkswagen, etc., etc. So this pretty much reflects our market segmentation and the industries we are catering to. In the recent last 1 year, what major development has happened is that all the companies that I mentioned earlier, or all the client base that I mentioned, was belong to B2B segment. And last 1 year, we started with our journey to the of getting approvals as well as supplying to the B2G segment. So in that, we have catered to repeated orders of HAL, NTPC, and BHEL, I think Indore and Haridwar. So there are still more orders in pipeline, and few more orders that we are hoping to get very soon. So this way, Maiden Forgings now also has a market segmentation in B2G segment, specifically for defense infrastructure and railway. So we are catering to those companies, and further, the next move that we are focused on, there are three areas or sectors where we are most focused on right now for the future expansions. First and foremost is this B2G segment, where specific importance is given to BHEL and to defense sector and the infrastructure sector. And we already have, during the last 1 year, we have three, four, five approvals from renowned uh, B2G segment customers such as Ordnance Factory Board, Kolkata and Muradnagar. Then from DRDO, Bangalore. Now next comes DRDO, Chandigarh, which we are hoping to get very soon. So there are these all have added to the credentials due to which we are able to get score orders from multiple organizations based on this. So this is the first focus area, and we see ourselves 2 to 3 years down the line as a hardcore supplier of critical components to the defense and infrastructure segments. And next focus area is to expand our markets abroad, especially talking using leveraging the Gulf channels to better cater the markets of Europe and USA, and uh, making strategic alliances with these countries, which already we have made in a few countries, and we are looking forward to score orders from there in larger volumes and quantities, thus increasing the overall share of export sales in our revenues. So this is the second area, and the third development, that is the major development that is going on, is consolidation of unit 2 and 3 into one larger land, which was acquired last year, about 4 acres of land, and we started construction this August after getting all the approvals and clearances, and the construction is in full swing, and by the end of this financial year we expect it to be operational, and by July, that is first quarter of the next financial, to be operational fully, and both the units consolidated and two products lines added with which would be making sales by my expectation by July or August month next year, that is galvanized wire or GI wire, and second is stainless steel components. Both again are vertical and horizontal integrations of us, and having better margins than our existing product lines, as well as already a pre-built demand for these products is there, and so whatever capacities we are planning in the first phase should be fully utilized within 2 to 3 months after the installation, because these products have been planned after due consideration of what our customers are demanding, and based on their demand, the capacities have been planned. So this is pretty much, and if we talk, because the theme is about beyond the numbers, so I would like to take a special note about the vision that we are looking for. This is a company where I am running the company as a second generation. So my father also had a big vision. He started with a very basic commodity, that is carbon steel bright bars. Today we are catering the forward integrations which are more critical, as well as we are into alloy, stainless steel, as well as specialty steel. So all these have been done uh, in alignment with his vision. What his vision was, that we should be able to cater to something specialty product which we were not able to do in the earlier times. uh, that is why today there are few customers who are regularly connected to us from long term, because we developed those precision products for them, and which was hard to do back then, or currently also there are certain products which are in pipeline. So but still we somewhere fall in the commodity segment, though these are steel engineered goods. So next vision of the company is, it should be a well technologically integrated company, including B2B commerce of its own and everything. So it has to be a well technologically integrated company with a vision to minimize or to reduce, to even entirely eradicate the need for importing materials from Europe and US markets for the defense and infrastructure segment. And we should be able to substitute those imports, so that there is less reliance on the imports, and we can domestically produce those products within India. Uh, and secondly, it should be a company that should cater to the demand of the customers according to the latest trends, and it can go beyond for any product. It is not restricted to just stainless steel or carbon steel. It can be producing specifically specialty steels, and that is why we are getting these registrations with DRDO to be a research partner, and to cater to the special needs that currently India is not able to fulfill on its own. So we would be producing those products and supplying to the B2G segments, sector, catering to the private sector requirements, as well as exporting those products across Indian borders. So that is pretty much the vision that we look 5 years down the line, and we are constantly working on it, and we are very much bullish that we would be achieving all these targets very soon. So that's all from my side. So I thank
Thank
Tejas
you.
and Angela. Please.
Thank you so much, Nishant sir, for such a brief overview. So
Uh,
participants, the floor is now open for Q&A. You can raise your hand or also drop your questions in the chat. Yes, Shubham sir, please go ahead. So kindly
Yeah.
unmute yourself.
Yeah. Hi. Can you hear me?
Yes,
Yes,
sir, you
yes,
are.
yes, yes.
Okay. Yeah. Good afternoon. And first of all, thank you for the wonderful introduction uh, of the company. So I wanted to ask the consolidation which you are doing of unit 2 and 3, you have already purchased the land. What are the monetization proceeds from that particular land which you are expecting in this financial year? And if it's not coming in
Some,
this financial year,
like two lands are there for sale post we shift there. So one of them is to be done within this financial year, and the next one will be done in the next financial year, which we expect to happen fully by July or August.
uh, can we get some any numbers like how much you are expecting this financial year as a
Approximately,
proceed
as total proceed would be around somewhere around 10 CR
for this financial year?
for this financial year.
And next, uh,
Next would be again 12 to 15 CR.
uh, this would be
That is
after six.
expected. That is not confirmed yet, but that is expected. For
Okay,
this year, it is 10 CR. That is confirmed.
okay, sure. My second question is regarding your order book. Can you give us some color on your order book? What kind of order book you have,
It will be
and
approximately what our current rate is, like around 20 CR. So it would be around 25 to 30 CR, the current order book. Though I haven't reviewed it in last 15, 20 days. But if I haven't reviewed it, that means, no news is good news. So that is at par with the standard levels that we have usually.
so 25 CR per month, right?
25 to 30 CR order book would be there. No, we are doing about 20-21 CR per month, right?
Right.
So the order book can be beyond that. Like it is
Yeah,
usually
yeah.
around 40-45 days. Yeah.
Okay, and what part of this order book is from like B2G or specifically from defense sector?
That I will have to really, I mean, do a micro analysis for that. Currently, I won't have that number, but because what happens is, for example, I have an idea, rough idea. Like recently, only we delivered one or two orders to HAL and NTPC. So, like just 3-4 days back. So I don't know exactly like how much would be B2G in that, but that won't be a very big fraction, maybe 2, 3, 4%.
Okay, sure. And okay, thank you. And like there has been a long-standing strategy of the company to shift towards higher margin products with your
Yes,
pneumatic lanes and like stainless steel. But
correct.
we haven't been able to see those higher margins being achieved in the numbers. So
Yes.
can you give some color
See,
on that, and as well as
yes,
what would be the timeline and what would be the target margins
yes.
for the company?
The recently the 6 months result that we gave, that is the September's result, right? So that was the most squeezed margins we ever had. So there were two, three major reasons. First and foremost, this entire tariff thing, because the pneumatic nails was major product, like primary market is US. So that got hit back very badly in terms like 76% tariff was there overall. So whatever orders we had back then were frozen. So its sales reduced during these 6 months. So this is the most value added product. Plus, from either from Europe side or from US side, because we were exporting specialty steel products and stainless steel bright bars majorly to these countries. So overall, the global circumstances were not good. So that is why the sales of higher margin products were the least, I think, in these 6 months. That was first and foremost reason for the squeeze in the margins. And second reason somewhere was steel pricing has been dipping from last 2 years constantly. Over like the most cheapest steel also was dropping from a high of 63 rupees per kg. I'm talking about the cheapest steel. So, and this is across all the pricing levels, like any product. So from a high of 63 rupees back in May, June 2021, today the pricing, like in November, the pricing went as low as 39 rupees per kg. So it was dropping. Like for example, if you notice, last year also we increased the volumes slightly, but despite that, the revenues, the in terms of rupees, declined. So that was the kind of level the steel was falling. So due to that pricing pressure somewhere, obviously to stay competitive, we had to reduce our margin slightly. But this is when there has been a constant downfall in the steel prices, like the industry is overall going towards the downside in last 2 3 years. But 3 4 years after such a down cycle, the up cycle also comes. So whatever we have lost will be recovered. So these were the two major reasons why this was not reflecting. Now coming, when it should be increasing. First and foremost, not me, but overall sentiment is that in 2026 second half, these things for the steel industry particularly are bound to go upside. So that is a macro factor. So let's keep that also aside. Now coming to the micro factors that is particularly ongoing in Maiden Forgings Limited. First and foremost, post consolidation, we are expecting that by July or August, that means H1 of 2026, definitely the overall debt costs would have gone down by at least like per month saving of 20 lakh rupees. And on top of that, there should be 5 to 10 lakh of rupees of saving after consolidation due to reduction in electricity costs, power and fuel costs, due to reduction in manpower costs. All these factors should give a combined annual saving of 2.5 to 3 cr minimum. 2.5 is the minimum thing for 26 27 financial year. So that is the first and foremost thing. So that is why the margins will increase. And secondly, the like I said during my presentation, that GI wire and stainless steel components, I expect these sales to begin in July and at a full capacity from day one. Reason being because these products are particularly demanded by our existing customers, and they have a capacity to buy at least 7 to 800 tons of GI wire every month, and we are installing a capacity of approximately 900 tons. Same goes, like 60 to 70 tons is we are planning the capacity for stainless steel components, and we have LOIs for that already. So these should pick up, and these have better margins than the existing ones. Plus, the global markets are improving, and they are expected to be the much better by February. Also, for this Trump tariff thing, we were working on it, and we have found a bypass, leveraging our Gulf counterparts to send the materials via Gulf to US. So that should be also in workable from next month, that is January. So all these things have been counted. So definitely next year should be far more better. 26 27 I am considering to be a turning point, especially in terms of margin, even in the terms of top line, as well as margins, gross and net both. So there should be a huge impact, and 26 27 I expect it to be a great year uh, ahead.
Yeah, okay.
So
Yeah.
yeah.
Yeah. Sorry, please continue.
No, I am done.
Yeah,
Yeah.
okay. Yeah. Thank you for your such a detailed answer. One last question, and then I will fall back in the queue.
Sure.
Uh, you have always maintained like higher inventory, and you're one of the business model like faster delivery. You have constantly highlighted in the past as well. So, can you quantify how much pricing premium you are able to realize for this service? Because it's stretching our working capital cycle. So,
Definitely.
if you
See,
can just highlight what kind of pricing
okay.
premium you are able to command.
See, we are able to command at least, I'm just talking about in terms of margins. So, depending on the product, right? So, first and foremost advantage that we get because of that is in stainless steel. So, because stainless steel market has a very elongated cycle in terms of delivery, that is approximately 3 months also. 75 days is a standard, wherein we are providing under 30 days. So there, because we were new in stainless steel markets back in 2016-17, so now what has happened is that has helped us grip markets also. So we have somewhat, the first and foremost, it is not exactly monetary, but covertly it has helped us gain market as well as retain markets. So that is the first calculation that we have for extended inventory cost, that we are able to grab new customers easily as well as retain the older ones. First and foremost advantage is that. Now coming secondly, like how much premium we are able to gain via this strategy of ours. At least whatever margin we are getting at least 10% to 15% plus on that margin. Or you can say, if we are selling it, supposingly, like I said, the cheapest steel is for 39 rupees right now. So if we are selling someone at 43, so in this case, due to faster delivery, we might be able to gain 44 rupees out of that. So the exact, it will depend on product to product, because in SS the numbers change drastically. For example, if there is a product with a raw material price of 160 rupees, and say we are charging around 190 in normal circumstances, for faster delivery we might be able to charge 195 rupees. So exactly what premium we are getting, because it neither depends on product to product, nor it depends on uh, the every what would I say, that it won't depend on the uh, particular product, nor it will depend on like what time we are making the sale. Like each point is different, so it basically depends on what is the requirement of the customer, like how fast he or she needs it. So the premium changes every time. So it is flexible, but definitely whatever inventory cost we are bearing, we try to calculate it roughly multiple times, like at least 4 times a year we try to calculate it. It is far more better than carrying the premium is far more better than the carrying cost of the inventory.
Yeah, so sorry, I will ask one last question. So the inventory days which you are calculating, it is as a percentage of sales, or is it as like of the COGS?
As in, I didn't understand the question. कॉस्ट ऑफ
Uh,
गुड्स सोल्ड का आप इन्वेंट्री कैरिंग कॉस्ट का कैसे पूछना चाह रहे हैं आप?
नहीं, जो इन्वेंट्री डेज आप कैलकुलेट करते हैं,
तो एक्चुअल इन्वेंट्री वो बेस्ड ऑन द कॉस्ट ऑफ गुड्स सोल्ड.
okay, okay, yeah, okay. I will fall back in queue. Thank you so much.
थैंक यू, थैंक
Thank you so much, Shubham sir. Also, we have a question in the chat box. Stainless contributes 15% of volumes but 40% of revenues. What is the realistic time frame to meaningfully scale stainless volumes, and what operational or sourcing bottlenecks could slow this transition? Vishal sir?
Yeah, I'm just rereading it. Sourcing, there is no bottlenecks in the sourcing part, first and foremost. And secondly, there is no even operational bottlenecks. The main bottleneck that we are having at the present moment is again the global meltdown, because stainless steel demand, particularly in India, for our products, whatever like bright bars, wires, whatever we are doing, in India, it is limited. Though we are a very small player at the moment, so even in India, we can at least double down our sales if we reach the right customers. The main problem over here is that most of the Indian buyers ask for long-term credits, which we don't believe in supporting that, because that becomes a risky business for us in terms of like bad debts and everything. Touchwood, by God's grace, Maiden Forging doesn't have any kind of bad debts as on date. So that is due to our policy that we don't give long-term credits. We maximum give a 30 days credit, that to a very credible customer with a history of business with us, with a at least 1 year of history with us, and then we start passing on credits to them if they have a good financial behavior. So that is first bottleneck, why we are scaling up at a slow pace, because we don't believe in throwing materials. We believe in by selling, doing a business transaction where we sell the materials. So that is the first and foremost thing why we scale systematically in the domestic markets. Secondly, like I said during my presentation, that we are already having alliances in few European countries, and now we are making a tie-up with Gulf. So once these things are through and slightly betterment in the global market, these sales can even go thrice what they are, even just in 6 months. So that is a moment we are, just waiting for. We have already played all our cards that were required to be done during last 1 year, and we hope that very very soon something good should come up, and there should be a great increase in this 15%. So maybe next year we are contributing in terms of volume 25%. So automatically you can calculate how much it will contribute to the revenue.
Thank you, sir. Next question, please. Participants, you can raise your hand or drop your questions in the chat box. There's one more question. You mentioned moving away from commodity-like orders towards defense, power, and infrastructure. What percentage of current volumes would you classify as commodity today versus 2 years ago?
Commodity would be majorly the carbon steel products that we are doing, or some part of alloy. So I think uh, right now I don't have data, but it should be around same. 15% should be not commodity like business, and 80-85% would still be commodity like business. So that shift, we earlier we were not doing that, but in 6-8 months we have started focusing on that, and within next say 1 to 2 years I expect that that volume should be very high in not so commodity like business.
Okay. Next question, please. Question. Within stainless, management highlighted 430F and harder to source grades. How defensible are these realizations over time, and what prevents competitors from entering this niche?
See, initially what we also faced was the sourcing part, but now our sourcing part is smooth, so that is why we don't find it difficult. In fact, I'll tell you, many B2B commerce platforms, such, I mean, they're unicorns, big unicorns right now, started 8-9 years back, all of them. So they still are not able to do much in stainless steel because they are not able to source the material from the vendors. So that was a major problem, but that hurdle mm, has already been crossed by us, and now we don't have any particular hurdle in that area. Second question, I think, yeah,
B2G
B2G.
currently contributes just 1 to 2% of revenues with a stated target of 10% next year. What needs to go right operationally and commercially to achieve this setup within 1 year?
First and foremost, operationally, if we talk about the things that need to go right, is this consolidation. The new plant would be having capabilities to get approved instantly by multiple B2G organization as well as export customers, because it has been designed in that way. So operationally, that is one challenge, one opportunity as well, that could contribute largely to this goal of ours. So that needs to go right, and commercially to achieve this step, see, multiple costs in last 6-7 months have been spent to get these approvals and everything. So these approvals might not have given a push to the sales right now, but have built up long-term credentials for the company as a supplier to these sectors. So if we talk about commercially, so I don't see any bottleneck commercially or any challenge particularly, but definitely the working capital requirement will increase because most of these agencies pay in 30 to 60 days. So that will increase, but that we have already arranged, and the internal accruals are also going to be good once we have consolidated. So these challenges can be taken up, and within next 1 to 2 years, definitely we should achieve that goal.
Thank you so much, sir. Shubham, sir, please go ahead.
Yeah, thank you for the opportunity again. So, sir, what would be the capacity utilization for FY26
26
full
would be
year?
around 75% approximately.
75%. Because, and I read that after the consolidation, your capacity will increase to 62,000 metric ton. Is that understanding correct?
Sorry.
Like after consolidation, your capacity will slightly increase more to 62,000 metric ton. Is that
Right.
understanding correct?
Correct.
And so, what would be possible capacity utilization for FY27 once everything becomes operational
It should go around 80% of that new capacity.
of that new capacity?
Because see, during my presentation, if you notice, I said we are installing a capacity of 900 tons per month for GI wire, right? That
Yes.
turns out to be approximately 11,000 tons annually,
Yeah.
right? 53 plus 11, 64,000 tons, right?
Right.
But we
Right.
are claiming 62,000 ton intentionally,
Yeah.
okay? Because we also don't know 900 tons is a said capacity of that much plant, okay?
Okay.
So we are considering 10% minus from that, okay? So we are saying that okay, 9,000 would be the added capacity instead of 10,800 tons. So first and foremost is that. Plus, like I said, this product has been brought specifically on the demand of existing customers. They are already buying wires from us and they want GI wire. For example, I'll tell you one application for this. घर में आपके बाल्टी होती हैं, राइट?
Right.
एक आती थी वो लोहे वाली बाल्टी जिसमें नॉर्मल लोहे का वो तार लगा होता था ऊपर पकड़ने के लिए बकेट को, राइट?
हाँ.
या पेंट्स वालों की जो बाल्टियां आती हैं आजकल, एशियन पेंट, नैरोलैक,
Right.
उनकी बाल्टी के ऊपर भी तार होता है, वो लोहे का तार होता है, दैट वी सप्लाई, ओके?
Okay.
नाउ पेंट की कुछ बाल्टियों पे आता है व्हाइट कलर का पेंट हुआ होता है, तो वो तो है एमएस वायर, नॉर्मल से बना होता है। अब उसी बाल्टी में किसी में होता है वो चमकता हुआ तार, विच इज जीआई वायर। दिस
Right.
वन ऑफ द एप्लीकेशन ऑफ जीआई वायर, ठीक है? तो अब
Okay.
हम वो जीआई वायर देंगे क्योंकि वही जो बाल्टी के हैंडल्स बना रहा है उसको जीआई वायर भी चाहिए और उसको नॉर्मल वायर भी चाहिए। तो नॉर्मल तो मुझसे खरीदता था, जीआई के लिए दूसरे के पास जाता था,
Right.
ठीक है? एंड द ट्रेंड हैज चेंज, उसको ज्यादा रिक्वायरमेंट है जीआई की, कम रिक्वायरमेंट है नॉर्मल वायर की, राइट? तो
Right.
जितना मुझसे वो एमएस लेते हैं उससे ज्यादा जीआई लेना है। तो आई हैव 4 कस्टमर्स हु हैव अ मंथली कंजम्पशन ऑफ 700 टन्स ऑफ दिस वायर,
Right.
ठीक है? एंड आई हैव 10 कस्टमर्स लाइक दैट इन माय एग्जिस्टिंग पोर्टफोलियो ऑफ कस्टमर्स, ठीक है? तो हमारा तो वो जो 700-900 टन हम कह रहे हैं वो 700-800 टन पहले महीने से बिक जाएगा। 1-2 महीना है कि भाई क्वालिटी डेवलप होने का टाइम एंड ऑल, तो जुलाई अगस्त, तो 8 मंथ्स जो होंगे उसमें तो वो पूरा का पूरा यूज होगा नया वाला।
Right.
तो हो सकता है 100 भी चल रहा हो, मतलब 100 तो आइडियली बहुत ज्यादा वो हो जाता है, लेकिन 90-95 पे चल रहा होगा, प्लस जो ग्रोथ यहाँ से मिल रही है, तो दोनों का कंबाइन क्यूमुलेटिव इफेक्ट शुड बी 80% ऑफ द न्यू कैपेसिटी।
And sir, ये जो GI wires and stainless components which you are adding to new products, इसके क्या margins रहेंगे?
इसकी मार्जिन 25 से 30% रहेंगे बस।
25 से 30%. And sir,
ग्रॉस
the
ग्रॉस मार्जिन।
gross, yeah, okay,
क्योंकि क्या
fine.
है, एसएस कंपोनेंट्स में तो प्योर मार्जिन भी बहुत अच्छा होगा। जीआई में क्योंकि एडिशनल जिंक हमारा एक वो बन जाएगा कंज्यूमेबल रेगुलर, एंड जिंक इज एक्सपेंसिव, तो उसका नेट मार्जिन आई विल हैव चेक, लेकिन उसके ग्रॉस और नेट में थोड़ा ज्यादा फर्क है, लेकिन स्टेनलेस स्टील कंपोनेंट्स के ग्रॉस और नेट में उतना फर्क नहीं होता क्योंकि ब्राइट बार हम ऑलरेडी बना रहे हैं इसलिए।
Okay. And sir, the defense which we have like recently approved, we were registration we मिला है with ordnance factories and we have fulfilled orders for HAL and TPC. So, what kind of products currently we are supplying to them?
ये सब थिंग मेजरली आई थिंक एलॉय स्टील ब्राइट बार हमने सबसे ज्यादा करी है। क्योंकि एलॉयज, जो एलॉय स्टील हम कह देते हैं ना इतने इजीली, उसमें कम से कम 150 ग्रेड्स आते हैं, जिसमें से शायद 30-40 हम रेगुलरली करते हैं, और 100 जो है हमने शायद करे हों ना करे हों पता नहीं। लेकिन क्योंकि हम नेचर समझते हैं, वी हैव द टीम फॉर मेटलर्जी एंड क्यूसी, परफेक्ट टीम विच अंडरस्टैंड्स मटेरियल्स, एंड वी हैव द मशीन दैट हैज कैपेबिलिटी। सो जैसे एनटीपीसी का शायद जो ग्रेड आया था मेरे पास अभी रिसेंटली, दैट वाज क्वाइट यूनिक फॉर अस ऑल्सो। So we sourced imported material for that. We didn't import it directly, but via a trader who was importing via importer. So that product we catered to. तो वहाँ पे जो है तो उधर सबसे ज़्यादा स्कोप खुलता है। जैसे मैंने कहा, एक स्पेशलिटी स्टील वाला आ जाता है कॉलम, अब उसको एलॉय कह लो, स्पेशलिटी स्टील कह लो, कुछ भी नाम दे दो, तो वहाँ से सबसे ज़्यादा जो है हमारा आउटपुट निकल के आएगा इन सारे ही सेगमेंट्स में। अभी भी आ रहा है और
Okay.
आगे भी उसी से आएगा। एंड दैट इज व्हाई आई सेड कि हम लोग डीआरडीओ के साथ भी क्यों रजिस्टर करा रहे हैं। डीआरडीओ को कोई सप्लाई थोड़ी ना होती है, लेकिन ताकि हमें उनकी भी हेल्प मिले, उनके जो रिसर्चर्स हैं उनकी भी हेल्प मिले, प्लस एक नाम हो जाए कि भाई कंपनी डीआरडीओ के, एक क्रेडेंशियल्स बन जाए कि डीआरडीओ के साथ मिलके हाँ आर&डी पे स्पेंड करती है कंपनी। तो वहां पे हम लोगों को एक एज मिल जाती है कि हो सकता है विद इन नेक्स्ट 1 ईयर और 2 ईयर, आई मीन आई एम टॉकिंग अबाउट मिडल टर्म फ्यूचर, मिड टर्म फ्यूचर, तो उसमें हो सकता है हम पेटेंट्स भी लेके बैठे हों।
Right, right.
दैट इज द इंटेंट, जो मैंने स्पेशली बोला क्योंकि नाम ही बियॉन्ड द नंबर्स है, इसीलिए मैंने ये चीज जिक्र करी। अदरवाइज और प्लेटफॉर्म्स पे मैंने एज सच नहीं मेंशन करा इस चीज का। बट दैट इज
Right.
द इंटेंट कि वी शुड बी अ commodity business, we should be a specialized business which is holding some patents, which spends on R&D and develops those products which are currently being getting imported.
Okay. And sir, like you said, your vision is to supply critical defense products. So, like,
Right.
uh, किस kind के products हैं? If you can give some
मैं
high
देखो,
color
दिस
on
इज
that.
अ वेरी वास्ट स्टेटमेंट। ठीक है, अभी पहला स्टेप, लेट्स फोकस ऑन दैट फॉर नेक्स्ट 1 ईयर, दैट इज द कंसोलिडेशन एंड getting the new plant installed, right? Because that plant installation is the most right plant installation is the most critical step for all these future visions. So that is the prime focus area. Once it is done, then definitely we would be looking, like we are all constantly on lookout for opportunities to produce such products, or to develop such products. So definitely once we are through with the consolidation process, then we would be more clear as to what all next we are going to produce after we have started the production of GI wire and stainless steel components.
Okay. And
Right now,
sir,
too soon, I'll say too soon to comment what product it is going to be.
okay, sure, no problem. And sir, अभी क्या spend होगा like on R&D as percentage of revenue?
हाँ देखो, लास्ट ईयर तक तो नॉमिनल था, इस साल आएगा कुछ, तो विल सी। रेवेन्यू का आप कह रहे हो आधा % होगा शायद
Okay, आधा percent.
इस
ठीक.
25-26 में।
And sir, finally, जो आपका like what is your target regarding inventory days? मतलब कितना आप करना चाह रहे हैं inventory days? जैसे अभी तो काफी
सर
stretched है
जी,
और
मेरा मेरा फोकस इन्वेंट्री डेज को रिड्यूस करने पे नहीं है। मेरा क्योंकि हम सीओजीएस और रेवेन्यूज के बेसिस पे निकालते हैं, तो अगर मेरा सीओजीएस ही मान लीजिए हो जाता है 35 करोड़ रुपए महीने का,
right,
इन्वेंट्री यही रखते हैं हम। वी आर
okay,
एबल टू मैनेज दैट काइंड ऑफ नंबर्स। लेट्स से 70 करोड़ की इन्वेंट्री है, राइट?
right,
2 मंथ 60 डेज पे आ गया,
right,
है ना? तो विच इज
hmm,
आइडियल फॉर अवर इंडस्ट्री, 60 to 70 डेज इज आइडियल।
right,
सो दैट इज द इंटेंट।
okay,
It is not necessary that we reduce the inventories in absolute terms, right?
right,
अगर
right, right,
मंथली सेल्स बढ़ा देंगे, which is better for the company, तो 2 महीने पे आ जाएगी।
okay, okay, yeah, yeah, sir, thank you so much for
थैंक
answering so many of my questions and
थैंक यू
for your
थैंक
time as well. Thank you.
आज आज आपका भी दिन अच्छा था, हम दोनों की
Uh,
बात होती रही, कोई और क्वेश्चन ही नहीं आ रहा। चलिए,
right. Yeah.
You.
Thank you, sir.
Thank you
All the
so much.
best.
थैंक यू सो मच।
Thank you so much, Shubham sir. Next question, please. Angela, you also have any question from your end?
Yes, I've received a couple of questions, so I'll just ask you that, sir. Is it okay?
ओके, Sure.
Okay, so the first question is B2G currently contributes just 1-2% of revenues with a slated target of 10% next year. What needs to go right operationally and commercially to achieve this step up within 1 year?
This I have already answered, Angela.
Okay, so sorry.
Yeah, yeah.
And
So,
the second question I've received is defense and PSU orders typically involve long qualification and payment cycles. So how will you manage the risk of B2G orders?
see, it's not a risk. I already said that the general standard terms of payment is 30 to 60 days. So, if we talk about like we can only learn from the history that we have executed around 6, 7, 8 orders till now in 1 year, and none of them had any bottlenecks. We sailed through smoothly. So definitely we have the expertise. That is the risk we have to take initially, and operationally till now it's shows 100% success record. So that means we have the team and the equipment. So in future also we should be able to deliver that pace. And if we have already, let's say we have executed a good amount of orders and say rejection is about 1-2% also, then also that doesn't make any financial risk for us. Secondly, about 30 to 60 days payment. The best part of working with the B2G segment is that the payments might get delayed, so data cycles might increase slightly. As I said, that we are in a very right spot right now because with the actuals from the sales of assets and everything in our hand. So it is very right time to aggressively take up this B2G segment thing. And because we have the funding, we have everything in hand. Uh, Plus, the biggest advantage of working with them is that the payment is safe. It might get delayed, but so it's not a risk exactly. It is just a risk of delay, not a risk of loss. So that's the best part of working with this industry.
Okay, sir, thank you so much. I guess I've also completed with my questions.
Thank you. Thank you, Angela. So I think we have covered majority of the questions. So if there are no further questions, can we conclude the session?
Yes, please.
Thank you. Thank you everyone for your time and participation. If there are any further questions, you can reach out to us at corporateaccess@kirinadvisors.com. Thank you, Nishant sir. Thank you, Angela. Have
Thank
a
you,
great day.
Tejas. Thank you, Angela. And thank you, all the attendees.
Yes, on behalf of the team of Validated, I thank Even sir and all the participants and the Kirin team. Thank you, everyone.